Hey, Jim Gore from Thor Investment Management. What I want to talk to you today is about getting real. Real with part of your investment portfolio, investing in real assets, hard assets. If you look at our currency here, the $5 bill, it is worth $5 only because we believe it's worth $5. It's only paper. Back in the 40s, 30s, you used to see this green emblem used to be blue and it would say silver certificate. So you could take that to a bank, take your $5 in and get real silver dollars when they were real silver back then. The reason why this is important is that we see inflation coming back, but more importantly, we see real assets are very cheap versus financial assets. What do I mean by that? If you look at this chart here, since 1925, real assets, and what are we talking about real assets here? We're talking about real estate, we're talking about precious metals, we're talking about commodities, have never been cheaper compared to financial assets in their history. There were two times, major times I want to point out here. In the 40s, when we had inflation because of the war effort, and the government was printing money in order to pay for the war effort, real assets did much better than financial assets. And then if you look at the 60s and 70s, we saw real assets outperforming financial assets. That's when we were starting to debase our currency, taking us off the gold standard and started printing our coins, taking the silver out of them and putting other metals in there that are worth nothing. So real assets are cheap, but why do we think inflation is coming back? In our market update, we talk about four areas. I just want to bring up the two most important areas that we think we're going to have inflation. And both of them have to do with the government because the government will print money in order to solve issues. First and foremost is our debt. We have a $20 trillion debt, but more importantly, we have 10,000 baby boomers per day signing up for Social Security and Medicare. We have another 12 and a half years of that occurring. That's going to balloon our deficit, and one way to pay for it is going to be printing more money. Nero understood that, and he was the first one to start doing that in AD 54, and he started taking out silver content from his coins and started inflation back then. The other part of it is central banks. Central banks are being very lax with their money. We have negative interest rates throughout Europe. You are paying the government to own their government bonds in Spain, Italy, and Germany for 2 years out. That is just a way of them printing more money to spark economic activity. However, when you do this and it's on there too long, you're going to have inflation, and the best way to protect against inflation is to put your money in real assets, and that's why today is much better to have your money in real assets than financial assets.